Hey there and welcome back to the channel. My name is Nate Gritzmacher, and in this video I'm going to be talking about a very common misconception about fixed rate mortgages and the fact that this could put you in quite a pinch if you are not expecting it. Now, one of the biggest misconceptions about fixed rate mortgages is that your payment will never change across the life of that loan. Now, this is true for the principal and interest portion of your payment, but this is not true for the taxes and insurance that you're paying in every month. So if you have a mortgage, you very likely have what is called an impound account. You pay your principal and interest taxes into your loan servicer every month. And on top of that, you pay your property taxes and insurance. Your loan servicer takes those property taxes and insurance and they throw them away into an impound account for a later date when your insurance premiums and your property tax installments come due. They do this because it creates a little bit more security, and knowing that these items are getting paid, they don't have to worry about that. It creates a little bit of peace of mind for you. But one of the big downsides is you may not be aware that they are going to increase on you and when those are increasing. So something I always advise people to do throughout the mortgage process is become quite familiar with your property tax bills, the rates that are in there, the items that are in there, as well as your insurance policies. Now, you can get your property tax bill, or any bill for that matter, if you just want to go look up general county rates. You can go to a county assessor's website, type in an address, and pull the property tax bill and review it that way. I highly suggest you get quite familiar with that, talk to your loan officer about it, etc. Same thing with your insurance policy. Now, let's get into what can happen. So property taxes specifically have two major items that create the total annual tax bill that you will receive, and that is the assessed value of your home. Not the same thing as the appraised value. Don't get those two things confused. When you purchase the home, you got an appraiser to appraise the value and give an opinion of value. Completely irrelevant. The county assessor is the person that controls the assessed value of your home. In states like Texas, this can vary year by year drastically. In states like California, there is actually a limit to how much that assessed value can increase every year. So some states are a little more protected than others. In Texas, it's a lot more common to get a wonderful letter from the county assessor being notified that your assessed value has increased significantly and therefore your property tax bill has. So there's the assessed value, which is essentially just the value that the county assessor thinks your property is worth just based on their market analysis. You get a wonderful letter, and then if you feel they are wildly out of line with their assessment, you can appeal it, and hopefully that works out. But there's the assessed value of the home, and then there are the property tax rates. Now, the rate is going to vary wildly between state, county, and the city that you're purchasing in. Like I said earlier, go to the county that you intend to buy in, go to the assessor's website and pull a property tax bill and go through it with your loan officer or yourself and get familiar with it so that you know exactly what to expect in regard to rates on your property taxes. Now, some things that can trigger a change in this are obviously market changes. If your county assessor is going in there every year or however frequently they do it, they will be reassessing and analyzing the value of that home and potentially increasing their tax revenue, i.e. your assessed value and your amount of property taxes that you owe annually. Now, there are some other things that can force this that may be a little bit more at your doing, and that is property improvements. So even if you just add a massive fence around your 2-acre property, if you put a pool in, if you put an ADU on your property, these are all things that ultimately impact the value. And if the assessor catches wind of these things, which they inevitably will, they will increase the assessed value of your home, therefore increasing your annual property taxes that you have due. Other things that can increase it are things like the city taking on a bond that people in the county or city voted on to establish another school, to build more infrastructure of some kind. These are things that you guys vote on in your counties, in your cities, and then they issue a bond, and then you as a property owner pay taxes to cover that bond. So keep in mind that these things are always changing, always on your doorstep. Keep an eye out for these proposals and be knowledgeable in what you're voting in and what it could potentially be costing you. Now, insurance is the same in that it's mostly always going to increase over time, and that's due to labor costs, material costs increasing, natural disasters, increased claims in certain areas. Long story short, if you're having a significant number of fires, if you're having a lot of floods like Texas has, those areas that are getting impacted by that are generally going to see a lot higher insurance costs. So if new developments come into the light where you live in regard to natural disasters, then you can expect an increase in premiums. Now, something else that I mentioned earlier is just increased material costs and labor costs. And this has to do with the replacement value of your home. When you purchase a home, especially with a loan, let's just say you got a $400,000 loan on your property. You can either insure it for the lesser of the loan amount or what is called the replacement cost estimation that your insurance provider will issue to you and the lender at the time of your quote. Now, obviously, the cost to rebuild something is really the only necessary amount that they care about, because if they can rebuild it for less than the loan amount, then great. The lender is not worried about their asset not being protected. In theory, it can be rebuilt for $350,000. That's not a big deal if it were to like burn down, for example. Material costs and labor costs are going to increase that number. And insurance providers do run those estimations every so often. So if the material costs and labor costs have significantly gone up, like they have in the last couple of years, your replacement cost for that property has likely increased, therefore increasing your premiums. So it's incredibly important to understand your policy, what's covered, how much you're paying, as well as your property taxes. Just be familiar with those and get in them. I know they're not the most exciting thing to look at and review and try and understand, but just because you have an impound account and you feel like your loan servicer has got it taken care of and you don't need to worry about those things, you definitely need to be knowledgeable in what's going on. The reason for that is because what commonly happens is these things are often triggered and you don't really know about it until your loan servicer reaches out to you and they say, hey, your property taxes have increased, your insurance premiums have increased. This happened, 6 months ago, and we're just now kind of reanalyzing your escrow and impound account. We've been under collecting for the last 3 or 4 months. So what happens then is you have to go the opposite way. You have to then overpay for your mortgage to make up that difference over 12 or 24 months, and then finally return to what is deemed the normal payment for all of those items. So like I said in the beginning, this can get you in quite a pinch if you're not aware of it. So I always encourage my clients to get very familiar with property tax bills, your insurance policy, sit down with myself, your mortgage advisor, go through these things. Just be well prepared for when these things inevitably happen. All right, thanks for watching. If you like this video, please like and consider subscribing to the channel so that you can see future videos. And if this has happened to you recently, just leave a comment. Let us know how much your property taxes or insurance has increased by. I know it's happening a lot across the country right now with just the increase in home prices and material and labor costs. So it's something that's always happening, and I'm always curious to see how it's impacting everybody and where they're from. So leave a comment, and I'll see you in the next video. Bye.